So Doug, the other day I was reading that the Social Security Administration is projected to increase the cost of living benefit for retirees by possibly 6.2% in 2022. There hasn't been an adjustment to Social Security like that in at least the last 15 years. And we know that Social Security doesn't tend to keep up with inflation. So that seems to suggest that we are in a time of very high inflation. And I'm just wondering, what should we be on the lookout for in terms of protecting our assets in times of high inflation?
Well, cash is not king in a time of inflation. So, for example, if we have 10% inflation, that means a dollar today is going to be worth 90 cents tomorrow. And then you get that compounding effect. So the dollar is going to be worth less as we go.
So don't have tons of cash sitting in your bank account.
No, and included in cash would be money markets, CDs, that type of investment vehicle is you're not going to do well in a time of inflation.
What about debt? How does debt work? I mean, we know that interest rates have been historically low for mortgages, for example.
Well, there's good debt and there's bad debt. An example of bad debt would be a credit card. First of all, use it to consume, say, something that has no gaining value. Say, for example, if you buy clothing, clothing today will be worth almost nothing tomorrow, and maybe you're paying 16% on your credit card. That's not good debt. But an example of good debt would be your house. So your house will appreciate over time, or should appreciate, especially in a time of inflation. And you're really putting the risk of the mortgage on the bank. So what I mean is you borrow the money to buy a house at today's dollars, and then you pay it back with the low interest rates at future lower value dollars, and the house is appreciating. So you're getting all the upside of the inflation, but you're putting the downside or the risk of the inflation on the bank.
By paying in tomorrow's devalued dollars for today's costs.
Correct. So it's important to have mortgages in a time of inflation.
Which is kind of backwards from what we were all taught.
Yes.
What about investments? How are we investing clients' money differently or at all?
There's certain investments that do very well in inflation, and one would be stocks or equities. Another one is, of course, real estate, which we talked about. And the third one would be commodities. What you don't want to be in is CDs, cash, or bonds, especially down the road if we have high inflation rates like we saw in the late 70s, where they have to increase interest rates. Having bonds, you're going to really lose a lot of money.
Well, certainly we've been talking with our clients about these themes, but if you are not a client and you have an interest in or concern about inflation and how to best deal with it, by all means, please give us a call. Thanks for watching.
Thank you.